Good morning, and welcome to our annual Latin America Capital Markets Summit. My name is Taimur Ahmad, and I'm the CEO of Latin Finance. We're delighted to have such a high-level group of officials, corporates, and financiers joining us throughout the day today to discuss some of the big themes facing the region's markets and economies in the coming year. I'd like now to dive straight into our first panel, in which we'll focus on managing sovereign debt, primarily from the point of view of some of the region's key issuers. We hope to explore the current environment for sovereign debt in the wake of the pandemic, and as we look to an eventual normalization in the market, whenever that comes. Obviously, capital flows to emerging markets are surging, but so were debt burdens across the asset class, and it's clear that the pace of economic recovery this year will be anything but even. We have a lot to discuss on the panel, but we couldn't have asked for a better group to discuss these issues than the one we have with us this morning. I'd like to take a moment to introduce our panelists. We're joined by Jose de Luna, who's Director of Public Credit at the Ministry of Finance in Mexico. And I'll point out that Mexico has won Latin Finance's award for Sovereign Issuer of the Year for the second year running. Many congratulations to Jose and to the whole team at Hacienda for that. And as I mentioned in my opening, we'll be hearing after this panel from Deputy Minister Yorio. We're also joined by Jose Franco Medeiros de Moraes, who's the Director of Public Credit at the Ministry of Economy of Brazil. We're also joined by Cesar Arias, who's the Director of Public Credit at the Ministry of Finance of Colombia. I'll also point out here that Colombia has won Latin Finance's award for Local Currency Deal of the Year for last September's 4.8 trillion peso 30-year bond issuance, which was a landmark transaction in its own right. So many congratulations to Cesar and the team at Hacienda for that transaction. And we're also joined by Lisandro Miguens, who's a Managing Director and Head of Latin American Debt Capital Markets at JP Morgan Chase, which is Latin Finance's Bond House of the Year. So many congratulations to Liso and the team. And finally, Armando Armenta, who's the Vice President and Senior Economist for Global Economic Research at Alliance Bernstein. Welcome to all of you. It's a pleasure to have you here, and we look forward to this discussion. I'd like to start by asking for sort of a reflection on where we are in the credit cycle today. It's almost a year into the pandemic. We've just come through a year of record issuance by emerging market sovereigns and Latin American sovereigns. And there are big questions about not only the path of the recovery, but the implications as well for sovereign credit this year, whether it's going to be a year of normalization or a year still of heavy financing needs, given where we are in the recovery. Thank you for that. But let's hear now from Cesar.
Thank you, Taimur. Hello, everybody, fellow colleagues in the region, and everybody that is tuning in for today. I'll try to be very, very simple. What is the challenge? The challenge for me is high financing needs. Back in the days when I worked at the IMF, when a country had double digits financing needs, it was seen as enhanced surveillance. So a country that has more than 10% of GDP in financing needs is considered under close observation. I think that is going to be the norm rather than the exception across emerging markets. We're going to have countries that in the case of Colombia is no exception, with high financing needs in 2020 and high financing needs in 2021. That's the challenge. Now, what's the opportunity? The opportunity was very well described by Lisandro, by saying that we have an unprecedented benign market for liquidity. It has an anchor on central banks. It has a technical position that is favorable, a redemption profile that is also favorable. So I think that the key from my point of view is to have a solution that allows you to meet those two ends, the challenge of having to issue significantly and to take advantage of that liquidity. And in Colombia, our approach to build that gap is something that we borrow from monetary policy. You can have flexibility in the short term if you have anchor expectations in the long term. So in order for that to work well, I think issuers, and we have here more than 70% of the financing needs of Latin America, we have to do a good job at providing markets with a clear idea on what's our approach to managing this sanitary emergency, which by the way haven't finished, but also what is our route forward in terms of fiscal policy, monetary policy, reform agenda over the next couple of years. So that will be my initial point. We have a big challenge, we have a big opportunity, and it's up to us at the issuer space to anchor those expectations and allow those markets to perform well.
Thank you, Liso, and thank you, Cesar, for your input. No, absolutely good point, Liso, about the development of domestic capital markets, which acts precisely as the counterbalance you mentioned. Let's hear from Cesar on this question of kind of managing volatility, and specifically picking up on the question of duration and composition, which Jose spoke to clearly. A central question in the case of Colombia, but talk us through a little bit how you have sort of managed that picture and some of our expectations for the coming year.
Yes, thank you, Taimur. The general principle is diversification. We tap very different pockets of liquidity in 2020. We tap non-traditional instruments in the public sector, like I'm sure Mexico and Brazil also did. There was idle liquidity that we borrow in local currency. We put a lot of emphasis in the local market. We introduced an innovation which was recognized by Latin finance, and is the use of syndications in addition to the typical auctions that we have. That had a very good impact, not only because it allowed us to increase the size of the issuance, but also because it contributed to diversify the local investor, the investor base of our instruments. So we are going to continue to do that. That is a feature that we borrow from what many of the countries in the OECD do, especially the smaller ones, Portugal, Spain, and others. In the same line that Mexico, we are also putting emphasis on developing green financing in the local market first. So we will be launching the Green Test in July. This will be 2 auctions, monthly auctions, from July to December. So we're going to continue to put a lot of emphasis in the local market. especially because we also experienced an increase in the share of foreign currency financing last year. We were 70-30, and we moved to something closer to 65-35 during the impact of the high financing needs last year. But we're also diversifying in the external foreign currency liquidity. We were very active tapping multilaterals. All of our bilateral and multilateral counterparts, and we added an additional one, which was that we drew down on the flexible credit line with the International Monetary Fund. And we were also active both in issuance and in liability management. We also recently finished our exercises in external markets with $1.6 billion that we issue in the 10 and the 40 year in dollars. And we conducted our largest liability management exercise for $1.2 billion. So I would say what to expect in 2021 is more of that extreme diversification to make sure that we tap all those pockets of liquidity, both in local and foreign currency.
Thanks, Cesar. I mean, you mentioned, of course, that this won't be a year of normalization as such, right? But obviously continued extreme demand in terms of funding needs. Do you expect to get back to that 70-30 composition by year end? Is that a goal? Is that a target for this year, or what can we expect?
It is definitely the guiding principle, but we have to be very pragmatic and very tactical. The idea is to overweight again local currency issuance, but we have to see how the market develops. We wanted the same last year, and we very pragmatically changed course given the sources of circumstances. If you ask me, today our base case is something similar to what Lisandro was describing. There is a big anchor for low rates, at least in 2021. Currencies are performing better in emerging markets. And if those conditions hold, I think that we, the three of us at least, will be able to specify or localize a little bit of what we went back in the last year.
Okay, thank you. Well, let's hear now from both Cesar and Jose just on the question of ESG frameworks. Cesar, as you yourself mentioned a moment ago, Colombia kind of well advanced in its thinking on green bonds. But just tell us a little bit, speaking to the points Franco was making about some of the challenges in putting in place such a framework, and also questions you've been getting from investors. And what the principal concerns are among investors in the implementation of this whole strategy.
Yes, thank you. It's a long journey. If you want to do it well, there is a huge debate in the community about greenwashing, which I think is only gonna gain more force. So the approach that Colombia has taken is that even if it takes a few more months, you should take the responsible route of being very transparent and very accountable to investors. As Armando was saying, they are going to be very strict because they also have constituencies in their funds that they have to respond to. So that's first. So and we spent the whole 2020 developing our green bond framework and portfolio. Today we are in the stage of external verification, what's called the second party opinion, and that's why we expect to be ready to launch them in the local market starting in July this year. So that's for green. Then for the social, we are very early in the process. We have to build the portfolio and have to do the framework that will probably take us most of 2021. and then go into the verification process and issuance probably next year. The sustainability is sort of a weighted average, correct me if I'm wrong, Armando and Liso, of the green and the social. So we're less stressed about that. But definitely we want to send two messages, because the challenge of green bonds is that when you look at your budget, you're sort of underwhelmed to see that maybe your policies are not as green as you thought originally. So sometimes you have the issue of small portfolios, small number of projects, okay, and complexities in if this is considered green or not. So that was the reason we decided to take sort of a different route and do it gradually at a smaller scale and in the local market. And in that case, we think that this is going to foster a new thinking in the government agencies and in the investor community in Colombia, that they have to put forward more green projects in the budget and the corporates in their business plans, so that everything is going to be greener and greener. And that was the reason why we took that approach. That is a bit different than some of our peers, but that we are confident that we can deliver on that mandate of sustainability.
Very good. And Cesar, if I could just ask you before coming to Jose, just on the whole question of the green issuance, aside from the national strategic objectives and the sustainability framework of the national government, from a debt management perspective, can you just pinpoint the specific advantage of this approach?
That was Jose or me? Sorry.
Sorry, that was you, Cesar, and then we're going to come to Jose to talk about Mexico's experience.
Sorry. Look, we were very inspired by the exercise in Germany. As you know, in Germany, they launched what they call the twin bonds. So the same day, with the same financial conditions, they launched a conventional bond and a green bond. And they actually offer investors the possibility to switch back and forth between the instruments. And the result has been outstanding. If you look at those quotes, there is always a spread, what people call the greenium, in favor of green bonds. It can take 5 basis points, 10 basis points, the last time I checked. So there is definitely a benefit in terms of cost for issuer, but there's also that benefit of having a more impactful fiscal policy, and for the investor to have greater accountability on some of the mandates that they receive from their contributors.